Welcome, Tradespoon members, and let's take a look at our pick for January 16th, 2014. We're going to be taking a look at a long position in Kohlberg Kravis and Roberts and Company, KKR, ticker symbol KKR. Our risk-reward rating right now from Tradespoon is a 3, and the value momentum is a 7. And as always, take a look at our analysis that we do here at Tradespoon. It is proprietary to our firm, and definitely take advantage of it. You can pick through the technicals and fundamentals. Let's jump in right now and take a look at the price action. The closing price the day before the pick on the 15th was $25.74, right off the 52-week high of $26.11 and well off the 52-week lows of $13.35. We're seeing vol at that 28.15 range in the options, which is on the higher end for implied volatility, so we'll take a look at that in just a moment after we get to the option picks. And the expiration date of the options we are going to look at are on 2/22, February 22nd, 2014. Let's actually scale down and take a look at the picks. We're going to look at the stock trade. And as always, the entry price, $25.74, is something that you can put in either pre-market or you can wait until the market's open in place. That is your discretion. We're putting in a target gain of roughly $3.80 higher because we're going to be going long the stock, which would roughly get us out at around $29, almost $30. And you would put a sell limit at that level at good till cancel. We'd put a max loss, stop loss in $3.80 below the entry price. In this case, it would be right around $22, which is where we would put that sell stop below the market, and we'd work that simultaneously good until cancel. Taking a look at the options trade, we're looking to buy the February $26 calls. We're willing to pay 70 cents or better. The target gain is going to be 70 cents higher than our entry price, and again, you can either place that pre-market or you can place it after the market's open just to get a feel of what's going on from the price action, and if you have that ability to do so. If you do get filled at that limit price, you want to put your target gain at 70 cents higher than your entry price. So in this case, we would put a sell limit until cancel at $1.40. Our max risk or max loss will be the full amount of the contract cost that we paid, which would be 70 cents or $70 per contract. And use prudent risk and capital management on sizing. We suggest somewhere between 1 and 5% on the stock picks. And for you smaller account holders, you can go as high as maybe 7.5 to 10% as far as your cash available or net buying power. But again, be prudent on that. For you option spread traders, this is where you could go in and actually place trades using multi-legs. In this case, we're suggesting putting in a put credit spread. That is where we're selling these February 26 puts. We receive $1.20. Now, because we don't want to have unlimited risk or risk down to 0 in this case, because that's as far as the stock can go, we're going to put a stop down there, or we're going to buy another option, and that's going to be the $25 put. For that protection to the downside, we're going to have to pay 70 cents, which basically leaves us with a total profit opportunity of 50 cents. That's the credit received, 120 minus 70. That is your max profit. Your max risk is the difference between the strike prices. The difference between 26 and 25 is 1. And you subtract the 50 cents, the credit you receive, or your max profit. So your max risk is 50 cents. And again, you can always use our proprietary virtual trade to start building out your knowledge, understanding, and your risk tolerance for these particular strategies. As I had noted too, taking a look at implied volatility, and you will see we have 3 lines. The stock price is the red line, the historic volatility is the blue line, and the implied volatility is the green line. And you can see right now that the implied volatility from this box or this table right here is well off its lows of 13.27. It's actually at 24.70, or as we pointed out, 25 and some change, or 28. So you're seeing it almost up 50% from its lows earlier this year. You're seeing historic volatility right in that mid-range, in other words, where that stock volatility. And the stock price is almost it's at 52-week highs at 26 and some change almost, or 25 and some change. So folks, keep an eye on this. Vol is moving, and that's why we are potentially suggesting that put spread. Going back to the pick, we want to scroll down and we want to stay aware of any stock events, whether it's technical or fundamental. And here you see our proprietary stock charts and key stock events. Now, I do want to point out that there are earnings in February. I believe it's the 6th of February, but you want to confirm that. And that is an event that you want to keep on your radar screen, and we will put it on our key stock events. And as always, news and commentary, we will keep you abreast of anything that's coming across the wires or any type of commentary that should be paying attention to. If you ever need any help, you can always email us at info@tradespoon.com and keep track of our training videos. And as a matter of fact, we have a new training video that's going to be coming out live on the 21st. You're going to have Randall List talking about the 3 pillars of investing. And as always, keep an eye on the current picks. You can see this is our latest pick, KKR, and any other pick that we've had out. And you can keep track of the performance here by clicking on the performance section. So with that, I will speak to you tomorrow.